MicroStrategy, like Ryan said, they are an analytics company in the business intelligence segment. The software is designed to be used across industries from retail, healthcare, finance, or the public sector. In addition to its operation, the company just funnels its cash flows into holding Bitcoin, which it holds roughly 189,000 at this time, and at 45,500 per Bitcoin, that's about 8.6 billion. And it's been a very volatile day, so those numbers are probably a bit different by the time you are listening to this. The shares are currently trading at $571 a piece, with a market cap of roughly $9 billion. As the company really has two sides to its business, the software business and the other being its Bitcoin holding, we'll break up the financials a bit to see how the software operation is performing. But we'll really, I'll go back and forth between where we are looking at the line items on the income statement. So for Q3, the company had total revenue of $129 million, up 3.3% from $125 in the prior year. And that's all attributable to their software business, of course. Gross profit increased 2.8% to $103 million from $100 million. Operating income shifted to loss of $25 million from an income of $6 million. The company had a net loss of $143 million, or $10.09 per share, compared to a loss of $27 million, or $2.39 a share in the prior year. This is largely due to a non-cash tax expense of $110 million, which primarily relates to the removal of a previously recognizable tax benefit. And just a little look at the Bitcoin bias. At the end of Q4, the Bitcoin is above MicroStrategy's cost basis, so you'll end up seeing a large tax benefit in Q4. And this is why the accounting non-cash expenses and benefits can really change their earnings quarter over quarter just to do with their Bitcoin price. Even though they have not realized it, they're still holding it. Nothing material has changed the business. It will completely change their earnings. So you really have to dissect their earnings quite a bit. So now stepping back up in the income statement to operating income, where we deviate to see how well the software segment is actually performing. We'll remove the digital asset impairment losses from operating income or loss for the quarter. Adjusted operating income, once you remove that, was about $8.3 million for the quarter, compared to $5.3 in the prior year. As well, we'll want to look at the income of just the software segment. So we'll just ignore the debt for now, as that relates to the Bitcoin holdings. They issued their debt specifically to buy Bitcoin, so we can ignore that for if we're just dissecting the software business, if it's like a separate business. So at a 21% standard US corporate tax rate, the net income would be roughly $6.6 million. So if they split the company into Bitcoin holding software business, you'd be looking around 6.6. That is a bit more of a conservative estimate, because there's going to be probably some value, but they don't break it out in the SG&A, which relates to their Bitcoin operation. So likely you'd have a bit higher if you were completely to strip it out of the company. As well, if you repeat the process for the trailing 12 months, you end up with a adjusted net income of about $6.5 million, as they had some losses attributable to the software operations during the past year. So really, the last quarter is about equivalent to the last 12 months. So now shifting to the Bitcoin holdings. At the end of Q3, the company held 158,000, up from 132,000 at the end of 2022. As well, since the end of the quarter, the company has purchased additional Bitcoin, putting it at about roughly 189,000. The dollar value of that holding is about $8.6 billion, with an average cost basis being $31,000, which means the company is sitting on an unrealized gain of about $2.7 billion at the time of recording. As I said before, the company uses debt to fund holding its Bitcoin. As the debt is specifically issued to hold Bitcoin, we can really net that out similar to like a margin account. The company holds $2.2 billion in long-term debt at the end of the quarter. So their equity in Bitcoin, if you were to net it out like a margin account, would be $6.4 billion. The debt is comprised partially of convertible debt and partially of senior secured debt, which is secured against its Bitcoin holdings. Notably, the convertible debt only pays 0.75% interest, and as well as they have a no nominal interest for their other issuance of the two issuance. This really was great timing by them. They did it when their stock price was high, which means the embedded call option, which is what a convertible bond is, was quite high. So that reduces the interest payments. As well, interest rates were obviously super low at the time. So they had great timing for that. Whether that was luck or strategy, that's up to your opinion more than anything. The management, I'm sure, will say it's all strategy, though. On the other hand, the senior secured debt, which was issued more recently, has a coupon rate of 6.125%. But that makes it so the weighted average interest rate is only 1.6%, which is quite low, to say the least, if you were to issue debt now. At the time, Bitcoin holdings, which means when you're taking the debt, the leverage ratio is about 1.3 times. So if you're on a cryptocurrency exchange, you'll see leverage. You can go up to 20 times, 100 times on futures. They're only at 1.3, so it's not like it's an absurd leverage by any means, but there is leverage to the Bitcoin holdings, of course. To fund the recent round of Bitcoin purchases, the company has used an at-the-market sale method to raise $610 million, and that was just immediately funneled right into Bitcoin. Not the first time they've done this. As you can see here, looking at a chart, their shares outstanding have increased materially since 2018 and really since 2020 when they started to really funnel any money they could raise into Bitcoin, and as well as use debt at the same time. Overall, Bitcoin is really the real reason why you'd want to invest in MicroStrategy. And as we can see here, the stock price reflects the Bitcoin price. The stock and Bitcoin are no means perfectly correlated. So if you're looking at ETFs, where it's nearly 1-to-1, and that's their goal, is to completely track the Bitcoin price movements, it's not going to have that. But as you can see, it's very closely correlated. And compared to, let's say, if you took any random stock in the S&P 500 and compared it to the S&P 500, you'd have much more deviation than MicroStrategy compared to Bitcoin. That being said, since the start of 2020, which is a relatively arbitrary date, Bitcoin itself has outperformed MicroStrategy. So moving on to a quick sum of parts valuation. Like I said, so what we're going to do here is take one part of the business, the Bitcoin business, and the software business, and separate them and see how much we're actually valuing the software business at. As Bitcoin is just really a value, if I went on the market with $6 billion, I could get relatively near the Bitcoin holdings that they have. So the Bitcoin value contributes about that 6.4 billion of the 9 billion market cap. So that means the software segment is valued at about 2.6 billion, meaning this ballpark PE of my previous estimate of what if you stripped out the business would be, there'd be about 400 times PE, which is just meaningless at that point. And this is a little to no growth software business. And like I said before, that's probably a low estimate of their income as you strip out some of the expensive to do with their Bitcoin options. So even if we allocate half of their yearly SDNA on it, $60 million, which would be the high end, they'd still be at a PE of 50 times for the software business, which is still very high, and that's generous at that point. So likely you're somewhere between that 50 and 400 if you were to strip it out. The exact PE, of course, would change on assumptions, and you'll have, so take this with a grain of salt would be the best way to put it. So really concluding though, MicroStrategy is a proxy for Bitcoin. The software business doesn't really add value and needed to fit the high value needed to fill the gap between the Bitcoin holdings and the market cap is just too big. The biggest value added for the Bitcoin segment was really them issuing debt at a great timing. You can say that now, but let's say they continue this plan, they keep issuing debt, they keep issuing shares. That's not really going to add value to the shareholder. They were just more, in my opinion, lucky than anything that they did at the right time. So if you want exposure to Bitcoin, because you wouldn't really want exposure to the software, just buy an ETF at this point. You can do it in the US now. If you want some sort of leverage, you can do that most likely easier with options of some degree. It is obviously very risky, but if you want Bitcoin, there's better options.
Yeah, this is the struggle with this type of a business is that investors look at it and it's like, well, what is it that I'm buying? I mean, am I buying a Bitcoin fund? Am I buying a software company? And just combining the two, it just adds to the confusion. Whereas investors generally like to know, they like a business that's just more focused on, a particular industry or, a particular strategy, as opposed to this is almost like a strange conglomerate of sorts, which always is typically going to trade at a discount.
I mean, I would say, why not buy a good software company that has a good growth path ahead of it, and then just buy Bitcoin or a Bitcoin ETF? Like, with this company, you have some company specific research or risk when you're buying it that you don't have with the Bitcoin ETF, for example. and then you could just buy a good software company if you want to own a software business, as there's certainly better software businesses that we have in coverage than if you just look at the MicroStrategy software business. So if you want to own that, buy that, and then buy the Bitcoin ETF separately. I mean, it to me, it doesn't make sense. I mean, the company probably does well this year if Bitcoin does well, but Bitcoin will do well as well.
Bitcoin ETF, right?
Yes.
If that's the exposure you're looking for, and if
Yeah.
Bitcoin doesn't do well, the company doesn't do well, right? It's not being, the software business. It's questionable.
And the Bitcoin ETF isn't going to change its strategy. It's going to own Bitcoin ETF. There is management risk here that this management team could say, Bitcoin's overvalued. I want to do this. And, so there, you have that risk. You know exactly what you're getting if you're buying a Bitcoin ETF. And you know exactly what you're getting if you're buying a good software-based recurring business. I just would, if you want to own that or own Bitcoin, do that. If you want to do the opposite and just own a good software company. There's certainly better software businesses out there.
We're an AI company now. Just joking, but as companies tend to do
for
that
sure.
They did mention AI in their software segment. Just for the
I'm
record.
sure they do.
Yeah, just add that in.
Yeah. You're just trying to get too cute. There's no point. Let's make it simple. I think that's usually the better strategy in investing. Keep it simple.
Stupid.